Good morning, everyone. Thank you for joining into this session. We will just be waiting for a couple of minutes before we begin with the actual presentation. Just bear with us while we admit a few more attendees and guests into the webinar. Again, for those who have just admitted, we're just going to wait for a couple of more minutes before we actually start with our presentation, waiting for more guests to join the webinar. Thank you all for your patience and welcome to our webinar today where we're going to discuss the amendments in the excise tax. My name is C.A. Ria Vansali and I'm a chartered accountant with qualifying in 2018. With experience in KSA, UAE and Bahrain VAT law, I've recently joined Anderson in UAE. Today, we're going to go through an amazing presentation which is going to explain the changes, the impacts, and the way forward in the recent excise tax amendments. Just before we start, just 3 housekeeping rules to make sure that our presentation goes in smooth and you enjoy as well as our speakers today. Number one, we're just going to keep all the participants on mute. We hope you understand that this will just ensure that the presentations run smoothly. Of course, number two, you're going to be having doubts. So we request you not to hold on to the doubts, but write it to us in the chat box so we can address them towards the end of the session. And number three, just be aware that this webinar is being recorded. And if you do happen to miss out because of some commitments, the link of this webinar will be shared to you with your registered email. So there's nothing to fear. Moving ahead, this is the agenda of our presentation today, where we're going to discuss the practical aspects, the way forwards, so many detailed discussions that we're excited to bring to you. But before that, let's dive into what Anderson in the UAE is. Most of you must have already heard about us, but for those of you who are probably new to our brand name, let me introduce you to us. We are Anderson in UAE operates as a full-fledged member, as a member for Anderson Global. With presence over 170 countries and 30,000 professionals working, we are very proud to be in the UAE and telling you that we are working relentlessly to increase our market share. We're also proud of having a substantial market share in tax litigation as well. With this, we want to also inform you that we often hold seminars, webinars just like this one, and our podcast called Everything Tax is an initiative where we discuss tax, everything about tax in detail. Moving on to the next slide, we want to tell you that Dubai has recently witnessed in this week the World Tobacco Middle East event. Well, what is this event? We see a lot of tobacco players, people from the tobacco industry attend this event. And we're very proud to say that Anderson UAE was also a part of this event. We had a lot of our excise team experts spoke to the exhibitors and the attendees and provided them insights into the excise tax implications. Well, without further ado, we're going to introduce the speakers to you, speakers of the day. C.A. Gaurav Chugani and Rishi Sundaram. Our first speaker, C.A. Gaurav Chugani, is one of the valuable assets of the firm. He's associated with us as a manager with over 8 years of experience in handling indirect and direct tax. A very proud moment for the firm and for him, I'm sure, is when he was awarded as a Nobel practitioner by the ITR World Tax. Our second speaker, Rishi Sundaram is an experienced tax professional with having done implementations for VAT in Bahrain, Oman, and even the UAE. His advisory and compliance in excise tax is also commendable, and also he's working really hard in the litigation sector. With further ado, handing over to you, Rishi.
Thank you, Ria, for such a wonderful introduction. And good morning, everyone. So, firstly, setting the picture for this webinar, let's have a brief understanding of the history of excise tax. Culminating over a 6-year journey now, the excise tax legislation has seen amendments and changes over the years, and it all began in 2017. So 1st October 2017, the excise tax law was introduced, where the excise tax law proved to provide the framework to administer the tax itself. Followed by the law, we have the introduction of executive regulations, which serves to complement the law in how procedurally the tax is executed within the UAE. Correct. Following that, we have the excise goods tax rates and methods of calculating the excise price, where they kind of define what goods are subject to excise tax, what rates they follow, and some methodologies. And also in 2022, we saw an amendment to the tax law, which brings us to 6 years since the initial introduction of the excise tax regulations. We have an amendment to the excise executive regulations now. And I think over 6 years, there's been a lot more changes in terms of clarifications, practical issues, and a lot of challenges and opportunities with excise tax over the 6 years journey that we reached this point of amendment. And Gaurav, how was that experience with the implementation or the journey thus far?
So thank you, Ria, and thank you, Rishi. So basically, we've seen the excise tax evolved over the last 6 years, wherein we started the excise law, wherein we just had two or three declarations. One was for import, one was for production, one was for export, and one was for release. So we didn't have more declarations. Now it's becoming like we have about 18 declarations with sub declarations, and there are several things which are there. So excise tax has evolved, and we see a lot of scope. Like there's track and trace which came into picture. We saw DTS coming into picture. We saw so many things happening. There were three regime changes.
Absolutely.
Opening stock declarations came into picture. Now I can confidently say that excise tax has evolved. There is very limited scope of further evolvement. But yes, amendments are a part of the tax. Amendments will come. Amendments will bring more clarity. It will either be in the favor of the SSC, or it will be in favor of the tax authorities. But amendments are the part of the game, and they are bound to come. Evolution, as per my knowledge, is that we have seen so many changes, and from a technology wise, there could be few more amendments and few more evolutions which are possible. So from 4 declarations to about 18 declarations now, from the e-service portal to the Imara tax, from DTS, from track and trace, from so many compliances. I think we are in the right direction, and the excise tax is going and becoming better and better day by day.
Absolutely.
And the amendments which are there right now, which we are going to be discussing, that is the Cabinet Decision 108 of 2023. This is basically something which will sort of give you a relief, and it will give you a sort of a better understanding about how you're supposed to maintain records and how you're supposed to sort of file your declarations.
Mhm.
So yeah, that we'll discuss in the entire webinar today.
Yeah.
So that is the main intention of the webinar.
Yeah, and I really agree with what you said, Gaurav. And excise tax, I think, as a framework, is also so closely linked with tax technology, right? So we've seen the evolution of the FTA's e-services portal into Imara tax. So the evolution is very prevalent, and we can, yeah. So just briefly talking about the legal framework, as we mentioned initially, what happens is the law is introduced, and complementing that, you have the executive regulations. And then post which the FTA publishes a lot of other publications, such as public clarification. You have some guides, you have notifications, flyers, seminars, events, roadshows, e-learning, and other updates, all to clarify and provide guidance on specific transactions and the key dimensions of excise tax. And then further, taxpayers also have the availability to file technical clarifications where they need to seek critical transaction tax positions and get guidance from the FTA on those aspects. And of course, you have audit where it becomes very important to have those compliances and those audit experiences handy because I think the name of the game is to have that continuous review and analysis based on the constant changes and the updates that come.
Yeah.
So executive regulations, again, very open to amendments based on the factors of the FTA choose experiences. And recently it's been amended. So without further ado, let's get into the technical aspects of the amendments.
So before that, I'll just say that the entire webinar is designed in such a manner that we cover the legal aspect, the technical aspects where the changes have been there. Then we discuss about the practical aspects, and then we throw some light on the litigations or that if there are some pending litigations outside, we can give you a brief about that. So we have divided the entire webinar or the amendments into three aspects. So we'll try to cover each aspect and give you a better understanding about the reading.
Absolutely. So getting into the First Amendment revolves around definitions. Now, the amendment stated that the definitions that will be effective in the executive regulations will be referenced directly from the law. Now, personally, I think when you think about definitions or the phrases or the words that are defined for any legislation, the definitions form a core activity or a framework in defining the legislation itself, because tax or any tax framework becomes interpretive and it's all about compliance. So it's very important that when you're reading or interpreting any piece of legislation, that definition is on a consistent and simplistic basis, which through this change is what is achieved by the FTA, since the definitions are predominantly referred from the law itself. So it eliminates any room for ambiguity, I say.
Yeah.
And otherwise, they have defined around 6 terms specifically in the executive regulations with the introduction of 3 new definitions. So the ones that are existing now are the definitions of duty-free, direct and indirect export, and overseas customers, where the new definitions are commercial evidence, official evidence, and shipping certificate. Now, this has also quite significance, if I'd say so personally, because throughout the theme of the amendments, we have a lot of documentary changes that are prevalent in the amended provisions. So these definitions become important to see in tandem with those provisions as well. So talking about official evidence, they've essentially defined it to a nature where official evidence is any official certificate that is provided by the customs or competent authorities, or it could be any document provided by the authorities that proves the exit of the excise goods, or it could even be as so far as a document or certificate provided by the recipient country's competent authority. So it's quite a broad definition, and it has a lot to unpack, right? Commercial evidence also is essentially the documents that are provided by your sea, air, or land companies, which basically becomes your airway bill or your air manifest, your seaway bill, sea manifest, and for land, your, again, landway bill and land manifest, essentially. And shipping certificate is essentially, I'd say, quite similar to commercial evidence, where it is the documents that are provided by your shipping companies that substantiate that the goods have been transported and exited the UAE.
Yep. So what we envisage over here is that the FTA has appreciated and acknowledged that there is a problem. There is a genuine practical challenge for obtaining records that the goods have exited the country, the goods have departed the country. So there seems a relaxation on official evidence because exit certificates have always been a challenge. To get exit certificates from various coastal areas, from coastal berths where there are no proper exit certificates issued, people have challenges. People who are companies who are which are located in maybe Ras Al Khaimah or maybe in Ajman, and if they're shipping something from Dubai, they still are facing challenges to get the exit certificates. So what we understand is that this change in the official evidence definition, it's a all type of definition where either you have this or you have that or you have that. But still, what we suggest is maintaining an exit certificate with the stamp saying that the goods had departed on a particular date is something which is very important. And if you're not getting it, then you still have a room over here that okay, you can rely on other supporting corroborative documents which you can use to substantiate that the goods have exited the country and has reached the other country. So now practically what you we used to say to our clients and which has been blessed by the FTA right now, we used to tell our clients that maintain documents that the goods have reached the other country. We used to say this as a practice because we have seen this in other jurisdictions, and this has been blessed by the FT right now, and they're saying that even if there is a document issued by the competent authority in the receiving country, that could also be used as a evidence of official document. So what a thumb rule should be, exit certificate is a must. You should have it. It should be stamped saying that this on this particular date that the goods had been exported. But if you don't have that, you can rely on other evidences or other corroborated evidence. What we as a conservative approach say that file administrative exception using this amendment, file an administrative exception. Maybe what will happen is that you get a standard reply that okay, fine, we are okay with it. Because what happens is that during audit, people do panic, and at that time, it's better that you have something in that you had tried and you had applied for an administrative exception, and maybe if you get in response to that, that makes your case stronger and things become in your favor. Because what I understand is that the entire industry, whether it's the tobacco industry or whether it's the sweet and drink industry, it's mostly export centric. And to my knowledge and my personal experience, 50% of them have challenges in obtaining uh, documents or evidences that the goods have been exported. And this has become a litigative aspect as well. We've seen, to my knowledge, we have about 7 to 8 clients wherein we have litigations going on for the exit documents. But we are optimistic that the Supreme Court would give us something in favor for the past as well. But yeah, the proof and the onus is always on the exporter. They have to prove that the goods have been exported. So try to make your documentation so strong. And interaction with the FTA is another aspect which is required because if you're an excise operator, you cannot operate without having direct interactions with the FTA. So that's our recommendation, and this is something which is of utmost importance. This definition itself is worth $1 million
Yes, absolutely.
because this is going to give relief to many, and this definition will have implications in three other articles,
Yeah,
which we will be discussing
discussing.
in future.
Yeah, absolutely. The next amendment comes with respect to tax deregistration, where the key change is essentially the obligation to deregister comes when the taxpayer is no longer liable for excise tax. And now the amendment states that the FTA is now empowered to forcefully deregister a taxpayer in the specific cases without the taxpayer even submitting a deregistration application. Now, I think the key thing here is to understand what is defined as no longer liable for excise tax. So this is defined as three things essentially, or three conditions you could say. So the first thing is that the taxpayer ceases conducting excise tax activities that are subject to tax, right? So any activities that bring forth a tax liability, ceasing to conduct those activities is the first step in this definition. The second point is that 6 months has lapsed since you stopped conducting these activities that bring forth the tax liability. And the third point is, again, it needs to be proven that you don't have any intention to carry out any more excise tax activities within the next 6 months, right? So these aspects are what constitute as a definition of no longer liable for tax. And essentially, the effective date where you need to deregister is the following day where these three aspects are met. And you have up to 30 days to submit the deregistration application. So the compliances become important. Now, talking about the deregistration by the FTA manually or forcefully, essentially, the cases where the FTA may deregister you is number one, of course, if you're no longer responsible for the tax as per the definition that is provided. Number two, in case keeping your tax registration has any compromise to the integrity of the tax system as a whole, which ties in with the cases like tax evasion and other kind of penal kind of cases that is outlined in tandem with maybe the tax procedures law and tax procedures executive regulations. And essentially, in case that the FTA does deregister you forcefully, they will inform you of the decision within 5 days of the actual deregistration. So I think here it again proves a core point, which is that taxpayers who don't have much activity in relation to excise tax really need to keep a monitor of these conditions specifically, because in the case that the FTA deregisters you, or even where it's your obligation to do it, you need to remember that there are deadlines involved here and there are compliances involved here. So any lack of adherences to that may result in those administrative penalties for late deregistration and other aspects. And it's also important to note here that the FTA did emphasize through this amendment that even post the deregistration, whether by you or manually by the FTA, you still need to keep in mind that a taxpayer will still be liable to the compliances for excise tax. So essentially, that means if you do any transaction post, deregistration, and you meet those conditions for re-registration, then that's something that needs to be taken care of. So through this amendment, I'd say the core focus is that the FTA wants taxpayers to ensure their compliance in terms of registration for excise tax. And of course, practically, we've seen many companies who, since implementation or many past years, who registered for excise tax, where they had very limited activities, whereas that registration has continued. So if you're filing the nil returns and you have no activity, then I think it's high time you check your compliances and check your obligations with respect to this.
Yeah. Just to add one or two practical aspects here. As per records, since July 17 till July 2023, there are about 1,623 registrants, to be precise, 1,623. And out of which, to my knowledge, because we are involved in this industry, so we understand that 50% or 60% are eligible for deregistration. Reason being, they're not carrying out activities. Maybe they got registered during the implementation as a stockpiler or something of that sort. They're not required to register because they're not doing any transaction, or they are not intending to do any transaction in the coming 6 months. So this uh, amendment is going to be very fruitful and very imperative for those registrants who are just filing nil returns and maintaining a registration. So I think this is a very important move. We have seen our clients. There are a few clients of ours who had applied for registration, deregistration. It's almost been 3 years that and audits have been concluded, fines have been paid, but the deregistration certificate has not been issued. The conclusion of the deregistration is not there. So I think this is a very welcome move.
Yeah.
For maybe, see, what I understand, there are many hotels who got registered because they fell into the ambient as a stock pilot. Their liability was maybe 10,000, 5,000 dirhams, 4,000 dirhams.
Right.
But they're still carrying that burden and they're still moving with that. But yeah, they'll once this is streamlined, I think the FTA is going to help them deregister and be done with this.
Yeah, absolutely. The next change comes with respect to stockpiling. So the change essentially dictates that if you have any lack of audited records in relation to stockpiling and you're not maintaining those audited records, for the stockpiled goods, then the FTA may deem the entire stockpile stock as being taxable, which has quite consequential implications should the time come. So again, here, I think it's just another focus for the taxpayers to pay attention to the ones who have activities in stockpiling, to have those audited records in place and to gear up for those compliances. Because at the time of an audit, again, you think about, as Gaurav rightly mentioned, it's very natural that during audits things get a little hectic, and to arrange for all information and documents sometimes can't meet the timeframes that the FTA provides you. So it's very important to be ready for such documents and information. And in this specific case, shouldn't the FTA come and conduct an excise audit and find that you don't have those audited stockpile records, then all of that stock will be taxable, which could have huge repercussions for your cash flow and your financial, as an impact to your company.
So practically, I would say that we have told our clients, see, stockpiling implication comes only when there is excessive stock
Yeah.
and there's a price change or a tax change or a regime change or there is an implementation of a new item in the excise tax. So I think in 2019 we had one issue wherein uh, we saw stockpiling. We saw again in 2017, first at the time of implementation. So we have seen stockpiling 2, 3 times. Now we have already told our clients and we have already suggested before this amendment also that a proper audited record is supposed to be maintained, because what happens is that there are 20,000 line items of inventory. Okay, saying what is subject to excise and saying what is not subject to excise becomes a question mark.
Mhm.
Okay. Nowadays you can't import anything until unless it's registered with branching. But at that point in time in 2019 and 17, people did import without getting themselves registered with branching and get paying the taxes. So that's the reason why the FTA wants a certainty that there's nothing which is missed out and there's no tax or stockpiling kind of computation which has been missed out. That's why they're relying on the reports from external auditors, so that they get a confidence that okay, fine, whatever is computed is as per the law.
Yeah, just supported by an independent report. Yeah. Next amendment, I think one of our major ones for today is the amendment to release for consumption, which has huge implications and is one of the more important areas in the excise tax as a dimension itself. So getting into it, the first change is that there was a change in clause 5A, wherein they changed the phrasing that the exception of damage and shortage was previously subject to legitimate cause, where now it is subject to justified reason. So in the previous legislation, legitimate cause was directly linked to or publicly clarified by the public clarification EXTP 007 on the waste on excise goods. So essentially, they mentioned that legitimate cause are for three reasons, which is force majeure, you have natural wastages, and waste from your production itself.
Correct.
Right? So I think what's interesting here is that this change to the phrasing justified reasons becomes a bit more ambiguous and more subjective, where you as a taxpayer, I think waste as a concept or shortage as a concept is a very subjective topic, right? It can be dependent on multiple conditions, your locality, the nature of the goods, the characteristics of the goods, your industry as a whole, your business practices. So I think this is, again, a kind of interesting change, because the justification will now rely on your supporting case and your supporting documents. And I think that is somewhat of a welcome change that allows you to present your case to the FTA and for them to accept it. Then clause 5B, they have introduced that this exception will now encompass natural shortages as well, based on three conditions essentially. So the first one is that the shortage is due to natural characteristics of the nature of the goods, essentially, and it meets the standards and controls defined by the FTA. Number two is that the FTA is notified of the shortages. So essentially, this again alludes to the compliance requirements on the FTA portal and whatnot. And number three is finally the supporting documentation is to be maintained and whatever related to the natural shortage and should be readily available for the FTA if they request it. And I think just with these three kind of requirements, there's a lot to unpack in these three requirements as well. So thinking about the first one, the first requirement is saying that the shortage is due to a natural characteristic and meets standards and control. So I think number one aspect is natural characteristics of the excise goods. So again, that segregation of the fact that this shortage is resultant of environmental factors. It's in nature. You think of something very common as like moisture loss, evaporation. These things are resultant of kind of scientific or natural character of the goods itself, right? It's something that's uncontrollable and meets the standards and controls. This one also has is very interesting because if you think now, I think it was clarified in the public clarification as well, but I think it's emphasized here that standards and controls to me alludes to the fact that there would be specified tolerance levels, right? So when you are kind of declaring these natural shortages, there should be a kind of alignment with your accepted tolerance levels, essentially the percentage of loss that you are reporting for these natural cases, being in line with what the FTA has in their mind based on the industry experience and other factors, right? Number two, again, the FTA is notified of the shortage, so this alludes to the compliance of filing your EX203B declaration on the FTA portal. But again, I think it's important to note here that we'll have to see and probably await for even further clarification because the way that the declaration is set up now may require some updating in tandem with this amendment. And especially, we need to see whether the condition follows the 30-day rule that is stated all throughout. But I think conservatively, and of course, as a recommendation, since that 30-day rule to report it within 30 days of the date of discovery should be followed as a layer of compliance until otherwise stated, right? So compliance is always a must. And supporting documentation, I think we'll get to that in the next slide.
Sure. Uh, just to give you a brief, now, as we know that there's a lot of practical and litigative issues which are here, specifically for moisture. Now, in tobacco industry, there is a moisture loss because the tobacco loses its weight over the period of time, and if a bale of 100 kg was received, maybe within a span of 2 months, 3 months, it would become 98, 97, whatever. So there is an element of moisture loss. Even in the processing units for sweetened drinks and carbonated drinks, if there is a sort of a mixture which is already excisable, and that component is also losing its weight because of boiling or because of any other sort of treatment in that, then also there is a element of loss because again it's losing its weight because of changing from one to another. So there could be various reasons why there could be a loss, or maybe there could be a reduction in the quantity, and it could lead to shortage. And if there is a shortage which is because of the nature of the product, the FDA has appreciated that this will not be considered as an release for consumption. That is a good thing because since the last 5 years we have been trying to litigate on this point, wherein we had shown evidences from the customs law saying that this is not excisable good because there's nothing mentioned, because the excise law always refers to the customs law saying that whatever is mentioned in the customs law will sort of what the list of items mentioned in the customs law will be applicable for excise also. So we read the law, we interpreted the law, and we could not find anything such as evaporation. So That is also one of the reasons. And I think this is a very welcome move because most of the people, most of the tobacco players in the UAE are at that point wherein they are either litigating or in the Supreme Court level in the final stage of litigation. So this amendment is going to be sort of what you might say a benchmark wherein people will start following this from the 1st of December. And again, I think there's nothing which has changed except the fact that the FTA has appreciated and acknowledged that moisture will not be considered as release for consumption. So this is the process remains the same. You still got to go through that same process. I personally feel that the EX203B will be redefined. There'll be a new dimension which will be added for natural uh, thing loss. Because why? Because they FTA wants to maintain a sort of control over what is getting lost as a national also. So there could be an amendment or there will be more clarifications provided on this because whenever there is an update, whenever there is a change in law or amendment, the FTA follows within a span of 10 days, 12 days of clarification. This expands and gives you a detailed understanding about the intention of the lawmakers. So what we can right now envisage is that there will be a requirement, but specifically 30 days is not mentioned. Okay, for reporting.
Yeah.
But yeah, conservatively, please report within 30 days. Continue doing until unless the further clarification is provided. But good news is the FTA has acknowledged that this is not released for consumption. And I am happy and I'm sort of blessed that I was involved in this entire process of litigation. So now I think the decisions would also be in similar lines because of this amendment. I That's what we envisage right now.
Yeah.
And there's a lot of substantial implication for the past, and we are yet to see that. So for now, continue doing this. Now we'll discuss the documentation aspect because documentation aspect, once you get a benefit, the documentation aspect become more important and becomes more vital for you to prove and substantiate. You can't just go away by saying that this is a national loss. You'll have to substantiate what you're saying. And you have to substantiate with documentary proofs, not by just saying that you meant that this is naturally gone. So you'll have to maintain sort of records. We have listed down the records based on our practical experience and based on discussion with experts and legal experts. So we'll discuss that in the upcoming slides.
Yeah. Um, so just on this theme of release for consumption, I think it's important to segregate that there is physical waste and non-physical waste, right? So physical waste, you think about something that is quantifiable, that is traceable, and it's available for inspection. So normal cases, on average, you could say tobacco dust, your expired goods, your damaged goods. And essentially, that is something that is resultant of your production process. And I think one key important thing to emphasize is that the FTA emphasizes that such kind of physical waste needs to be considered on each and every leg of your production cycle, right? Each stage needs to be considered. It's not just the finished, a final part of the production or the beginning. It's everything in tandem together. And from a documentation perspective, right? This is something that the FTA needs to approve and understand as a case for that exception to being treated as release for consumption. So ideally, we see that typically the documentation may include aspects such as your records for production of finished goods to substantiate what production you've done, your record showing what raw material has gone into the production, the records indicating the raw material that you've lost in the production. And I think what's also very important is, again, to give the FTA that confidence that these are the levels that you have lost, whether naturally or physical, is that internal records may not always suffice. It always can be increased in substantiation with independent reports. So it's very common in the industry, and what we always suggest is to keep lab reports handy that details the waste throughout the production process. And also standard operating procedures, which we've practically seen the FTA is accepting and at points requesting that essentially documents your entire waste process from the beginning to the end, with details of your kind of tolerance levels, details of how you procedurally carry out the waste, and basically every aspect in relation to your waste reporting. And finally, internal documentation trails, whether there's any kind of approvals that happens internally from your quality analysis unit, from your production team, from the final finance team. Ultimately, that leads to the point of you declaring that waste declaration on the FDA portal. So that becomes very important. And then again, with your non-physical waste, you have your aspects like moisture loss and evaporation, as we discussed. And just to, again, re-emphasize, it's very important here to segregate the fact that there is a key difference between there being a natural shortage, which is dependent on the characteristic of the good, and your normal shortage, which is dependent on the actual production process. It's just a byproduct or waste per se of the process as a whole, right?
Yeah. So just to give you a brief about what Rishi has said, I would like to just add two aspects. Documentation is the key over here. Recently, in the last 1.5, 2 years, we have seen a lot of inspections happening wherein the FTA is emphasizing on documentation. Whether it's the date of discovery, they are emphasizing that how did you get the date of discovery and how did you meet that 30 days criteria? Because it is subjective. uh, this reporting is entirely a subjective matter. And when there is a lot of subjective elements, there's a lot of questions which can ask, and you will need to substantiate how you will make your case. Because what happens is that even if everything is genuine and everything is legitimate, your documentation trail is something which can substantiate. Now, what for moisture, what we suggest our clients is to maintain blend-wise external lab reports, whether you get it done from Fujairah, from Germany or somewhere. That lab report is very important, which shows that, okay, fine, for this particular blend, maybe 1% of moisture loss is there, maybe for another blend, 1.1%, 1.2%, whatever it is, that particular blend wise bifurcation and segregation is a must. Second, the internal SOP, like Rishi was discussing, from the weight per master case, uh, like if 7.8 kg is getting used for per master case, what is the element which is going into the cigarette, and what is the element which is going out as a moisture, and what is the element which you have as a physical dust. So that computation has to be substantiated. Then your internal daily lab reports, which you have in the factory, you get in the lab report, which say that, okay, fine, this is the moisture element, this is the physical dust which is collected. And what happens is that these records are very substantial and important. And the production reports, which is generated by the production team, to my knowledge, there are a few new upgraded machines which give out these reports saying that, okay, fine, this is the moisture content, this is the units, this is the kg which was inserted, and this is the output. So those reports could also suffice. Then the production manager's report, which is going to the finance team, that is also very important. And the production manager and the finance team, which is recording this in the ERP system, or if it's getting automatically approved in the ERP system, and then from there to the FTA, the entire trail has to be maintained. Because what happens is that now the FTA is going to the ground. They have asked for the production reports, they have asked for factory manager's report to understand there's no leakage. And they are well within their rights to review these documents and ask for more detailed documentation in this respect. Because once you're getting a benefit,
Yeah.
okay, until unless you don't prove that you are eligible for the benefit, you will not get the benefit. So you can treat this as a benefit, because again, you may appreciate the fact that this is a loss which is happening within your designated zone, and the FTA is being kind enough to give you a benefit. So if you prove that you are eligible for the benefit, then only you will get the benefit, and the process is like what we are saying.
Yeah.
So yeah, over here we have just given a brief understanding. You can't treat this as a benchmark, please. For a king size cigarette, if the input weight is 7.6 or 7.8, and the moisture should be somewhere within. See, this is not a tolerance which I can precisely say, but this is something which we have learned over the period of time. And this is something where we feel that this is a confident tolerance level, but again, but tolerance is something which is very subjective. Now your moisture could be different if you have a fully conditioned office, if you have a fully air conditioned factory, if your lag time of travel, like if you're getting the goods from a nearby uh, supplier within UAE, then then there's lag time is less, then moisture would be less. If you're importing something directly from Africa and it is taking 30 days to travel, then the moisture content would be higher because the weight will get reduced over the period of travel time.
Yeah.
If you have a longer storage time, then the weight will again go on reducing. So these numbers are just subjective and they're just for the purpose of understanding. But what we understand is that if your conditions are not on your favor, the the moisture could be higher also. Right? We have seen few factories having moisture 1.5%, 1.6%. Few factories having when they're working in the most effective environment with nominal lead time of purchase, nominal lead time of execution, and with air conditioned office, the moisture is about 0.88% for a particular blend.
Right.
Now, blend also matters whether the blend is of a good, inferior, superior quality, or whether the blend is an inferior blend. So these things matter, but again, you can't treat this as a benchmark, but this is something which we have seen over the period of time.
Right. Coming to another, I'd say, very important amendment here. Again, we kind of discussed it during the definitions amendment, but essentially there is revised and more of a relief on the documentation requirements for exemption on exported goods. So essentially, the FTA has declared that any of the following must be retained, which is either customs declaration along with the commercial evidence, either shipping certificate and official evidence, or the customs declaration proving a suspension arrangement of the customs duty, right? I think here again, the noteworthy point to mention is that there is an additional clause that the FTA has mentioned in the amendment, which is that should they find that the documents provided by the taxpayer does not substantiate that the goods have been transferred and exited the country for the purposes of the export, then they may ask for alternative forms of evidence as well. So in the given case, while prima facie it does seem like there's a relaxation on keeping your exit certificates and documents, but it's important to note that one, the FDA still does have that power or the right to ask for it practically. And I think just overall as a recommendation, it's always recommended to retain these documents because at the time of audits and given the history of litigation on this specific aspect, we'll have to see the way forward. So definitely it's something to consider.
Okay. Now, what we have seen in this amendment is that the FTA is wanting the customs authority to review the quantity also. Why? Uh, Previously, what used to happen is that the quantity never used to get matched. We have seen instances during audit wherein the exporter is saying that the exported quantity is maybe 20,000 master cases, but ultimately, when we see the customs document, it is only 1,800 or maybe something lesser amount has been exported. So what happens in that case? The FTA would be only giving you a benefit up to 1,800, and the other 200 or maybe whatever the differential is there, that could be subject to excise tax because there's no evidence that the goods have been removed from the country.
Yep.
Now, one question over here is that uh, with this amendment, the FDA is wanting everyone to get the inspection done. Right.
Yeah.
If they're going to review the quantity with the customs authority, which means that the inspection has to be done. So this is a very noteworthy sort of amendment.
Yeah.
So I think there could be a sort of a responsibility of the exporter to get the quantities verified before then getting the goods exported.
Yeah.
So yeah, this is also something which you need to amend and make a policy and align your customs team and the start discussion with the customs authority.
Yeah.
So this is something which is very important. I think the logistics team has to work on this aspect.
Yeah, practically, we may see maybe a potential requirement for another certification from the customs that they've inspected this and they've verified the quantities as well. So it's something to think about going forward.
Yeah, and I think more clarity will be there once the public clarification is there.
Absolutely. The next change is in regards to your designated zone. So this was a short amendment, but again has far-reaching implications in our opinion, which is that the designated zones essentially shall be considered or treated as being as the UAE mainland in the event that the conditions and the compliances of the designated zone are not met. And I think this one is very has a lot of implications. If you think about designated zone compliances, right, when you're thinking about registration and renewal of your designated zone, there's so many aspects that you need to ensure that are in check. So you think about your stop reports and your stop record, the CCTV controls, the access controls, essentially the valuations for the financial guarantee, your warehouse plans, the excise tax good movements and flows, and also from an ERP perspective, I think practically we've also seen multiple times during inspections that the FTA places very specific emphasis in ensuring that your ERP system is capturing all the movements in and out of your designated zone, the way it captures the transactions and how it flows. So ERP compliances become very important. So overall, if there's any lapse or lack of adherence to any of these compliances during, let's say, an inspection or a excise tax audit that is conducted by you, then the FTA may deem that this is no longer a designated zone and this should be tantamount to a in the UAE mainland. And the implication of that is it may be fully possible that for whatever period that they define, your stock becomes taxable, which I think even for, in most cases, even if it's half a day, it could be detrimental and have huge significant consequences for companies, right? Yeah. So I think it's just a very important point to keep in mind that your compliances with respect to designated zones should be a priority as your general business process as well. Moving on, a deductible tax. So this amendment essentially dictates the documents that you need to submit for the exemption for exported goods. And this is just a similar or basically aligning itself with Article 14 that mentions the revised documentary requirements for export. So again, when you claim a deductible against an export, you need to submit any of the following, which is custom declaration and commercial evidence, or shipping certificate and official evidence. And I think the kind of discussion point you can make here is, again, to keep in mind that these are documents that need to be submitted. So again, once again, you need to ensure that your logistics team has a kind of streamlined procedure in tandem with your customs authority to ensure that these documents are readily available prior to the submission of the return when you can claim the deductible. So essentially, you can mitigate any cash flow issues from having the right to deduct in the following period because lack of documentary evidence.
Yeah. I would just like to add one small thing over here in the deductible tax. See, if you're exporting today and today we are on the 28th, 29th, and suppose if the goods are leaving the country on the 1st of December, there could be a potential cash flow issue which Rishi was referring. So effective logistics management is something which is important. Effective planning of exports is something which you have to do so that the goods leave the country and you have evidence that the goods have left the country in the same tax period. If not, there could be a potential cash flow implication which you may have.
Yeah. And the final major amendment in this publication is essentially the FTA has very benevolently introduced a case wherein you can claim a refund by non-taxable persons, wherein you're directly or indirectly exporting goods where the tax is already paid. So they have just introduced the kind of availability of this. Now, of course, this itself will be in effect from 1st of June 2024. So we're still a while away. But I think it's a very welcome change for those cases where you're a trader or a non-taxable person and you're exporting excise goods where the tax is already paid. And again, document with any refund, like Gaurav rightly mentioned, whenever you're getting a benefit, it needs to be substantiated with documentation because ultimately you are getting a benefit. So the eligibility needs to be there. And again, the documentation is in line with the previous deductible and the updated documentary requirement for exports. So I think all in all, this is just a very welcome change, and I'm sure many companies will benefit from this when ultimately it is implemented.
Yeah, just to add one thing over here, this is the only amendment which is applicable from 1st of June 2024. All the other amendments are applicable from 1st of December 2023.
Yes.
Moving ahead.
Yeah.
So we have a very quick way forward wherein we would request you to align your SOPs and workings. If you're having normal loss or evaporation loss or something which is sort of natural loss also. So maintain your records, maintain your SOPs, maintain workings which can substantiate that. Reports and records are something which is utmost important. System alignments to generate system generated reports are something which is very important. The FTA generally wants the reports to be generated from systems such that they can have more reliance on the designated zone, because if the designated zone does not have a proper ERP system, then the conditions of qualifying as a designated zone becomes a question mark. Uh, Documentation alignment for export is something which the logistics team has to work and align the documentation. Now there are certain welcoming changes. So discuss with the customs authority, align documentation. If there is a requirement for administrative exception, file it, be on the right side of the law, get the benefit, uh, enjoy the benefits which have been provided by the FTA now. Since we are sort of understanding that the excise is a bit different from VAT, and there are a lot of things which are changing on a regular basis, on a day-to-day basis, more clarifications, more audit experiences we are gaining. So what we would suggest is that conduct a health check, understand where you stand right now. If there is a requirement to upgrade or sort of change things, get it changed, take corrective actions if required, prepare and see how you are ready for an audit. Because when audit comes, because what happens is that the FDA has recently released the FAP templates for excise tax reviews. So try to populate those FAP templates. Try to keep yourself updated, because that FTA audit file for excise is something which is uh, a document which will be reviewed by the FDA. So if you're not prepared with that audit file, then audit becomes a bit difficult. You're not ready for the audit. Start preparing for those things. Streamline yourself. Review your tax positions. Review your documents. Identify the potential implications. Rectify them. Follow voluntary disclosures if required. Prepare yourself. Account for all the changes which you are supposed to do, and make your life simple, because again, excise implications are substantial. It's not a 5% implication, it is 100% implication, plus the additional penalties and the administrative penalties which will follow.
Yep.
So aligning is something which is very, very important.
Yep.
So we are open for questions. In case anyone has questions, you can just drop it in the chat, or and this PPT of course will be shared, and we have our alert also which was ready because the decision came out yesterday evening at 6:37, and the English version of the decision came out on the portal yesterday. So we were waiting for the English version to come out, and since it is out, we will roll out the decision, our update shortly.
Yeah.
So if anyone has some questions, you can take it. Okay. Okay, I think we have a question from Santana. Creating the documentation. So for outbound international journey, now we have seen this many a times wherein for outbound journey, the FTA is nowadays we have seen few litigations on outbound journey wherein if a vessel or if an aircraft or if a car is going on an outbound journey and the suppose cigarettes or cigars or maybe sweetened drinks are going to be used in that outbound journey, since there will be no export documents, since there will be no what you might say the record that the goods will be consumed or not. If the goods are going to be consumed, that will never be considered as an export, despite you fighting with the FT, because we've seen few clients of ours who had this litigation issue, but ultimately they ended up paying the tax filing voluntary disclosure. But if those goods are not going to be consumed and you have certain proof that exit documents are there, then you might get a benefit. And in this case, you may consider Sankana, you may consider filing an administrative exception. Maybe you will get a benefit. So as of today, sitting in November, you may not get a benefit. But from 1st January, for 1st December, if you apply administrative exception and if you maintain the other documentation, you may get a benefit. It's like 70% you may not get a benefit, but there is still a chance of you getting a benefit. But goods which are getting consumed in the aircraft or maybe the ship will not get the benefit. That is for sure. But if you're intending to export it out, for that you will get the benefit. For consumption, you will not get the benefit. Any other questions if anyone has? Okay.
Great. Thank you so much for the presentation, Gaurav and Rishi. Well, for those of you who have stayed till the end, thank you so much. Although I would just like to highlight, these may be easy to read, but not very simple to understand, considering each transaction can be very complex. So in case you do want to reach out to us for any assistance, our team is always available. Our tax alert on this will also be published soon. So with this, thank you so much again, and please reach out to us for any clarifications or assistance that you may need. This is Riya Bansali, and thank you all from Anderson in the UAE.